Hello and welcome to this 2016 AAT Business Transactions Assessment. So what I'd like you to do is I'd like you to do this transaction assessment as if you were in an exam. So I've run it in with all the questions and set the amount of time for each question of what you should really be doing in terms of the timings for those questions. Sometimes a question will be as long and will take up the full amount of time, or maybe even a touch longer. And quite often the amount of marks is about the content of the question, how important it is to the overall assessment. Not necessarily though that it will take that long. It might be given 10 marks, but actually it could be done easily in 4 minutes. Let's say it's an hour and a half exam, but realistically, I think over the course of this one, you'd probably do it in about 50 minutes. Really, do it in time to as an exam. And there's 3 reasons why I think you should do it in like that, in terms of letting this run and then just sort of each question run and do the question at the same time, and then see how well you've done compared to the answer. You'll learn faster, and more importantly, you'll see how I lay out the actual answer and my workings, really. So whilst you might get it right, I will get it right all the time, because my workings will highlight where I've got it wrong. So I'm going to explain throughout the exam where you can sort of have much better exam technique, that it will throw out that you've got it wrong if you just got it wrong in your calculator, what have you, and then you can go back and correct it. And that's what check your work actually means. Check your work doesn't mean do the exam twice. Check your work means set it up and be methodical. The use of tier counts, the way in which we add up our columns, the way in which we recalculate the VAT calculations twice in 2 different ways, independently of each other, and that will mean that you get much more. You won't make silly mistakes. If you also, as well, in terms of if you do it for time, you'll learn faster. You'll get through the thing quicker. Just do it to time. You'll be able to have this done in 50 minutes, and you will have learned a lot. Any mistakes that you do make will sink in. Any differences in your working compared to my working will sink in as well if you do it as if you're in an exam. And also as well, the most important thing is it's important to get used to being in an exam. Now, I'm a professional accountant, and I'm a fellow of the Institute of Chartered Accountants, and I was surprised when I trained a long time ago now. Now, the reason why I thought that I did really well was because I did my exams to time as if they were proper exams, and that was how I practiced my questions. And that meant that when I was going into the exam, I wasn't really thrown by things. I was used to it. And so I might get a different type of wording, or something might not go well, or it just might not go for me, or not be going for me on the day. But I would still always find a way to do really well at the end of it, because I'd felt like I'd been in that situation before quite a lot of times, and I knew what I was playing. So train like you mean to play, really. And so hopefully good luck with this exam. Leave it running in there though, so you'll probably take about 50 minutes for your work, and I'll probably do about sort of 40 odd minutes for my explanations. Hope you enjoy it. So this is a sales invoice task here from the practice assessments from AAT, and so what you're going to do here is you've got a purchase order here. So purchase order from the buyer, and then you're going to create the figures that are going to go into sales invoice and transfer them into the sales daybook. Here, things you've got to calculate here are things like the impact of discounts and VAT. So the impact of discounts in chapter 9 of the book, VAT chapter 7, whole chapter on that one. 7 marks, should be able to knock this out in sort of 3 minutes probably. Really, I'm going to come back in 3 minutes and give you the answer. So let's go. Okay, if you finish it anyway, just sort of skip forward to the 3 minutes, but we've 2 minutes gone now, so we'll soon be there. Right, so that's time. So let's have a look at the answer. Yeah. And so in here, the sort of key trick was whether this trade discount was deducted from the net amount from the amount before the discounts to get to the net amount after the discounts, and it would do here because it's a trade discount. If it was a trade discount or a bulk discount, it's going to be deducted from the amounts before discount to get to the amount after discount. And that we're going to apply the VAT through. If it's a prompt payment discount, it wouldn't be deducted because we wouldn't know whether the customer was taking advantage of that prompt payment discount or not at that point. So in terms of this one, then we've got next month before discount. Well, that's 120 units times by £3.60, £432. The trade discount does get deducted here from it, because it's a trade discount or it's a bulk discount. It wouldn't be deducted if it's a prompt payment one. So 7.5% off, so multiply the £432 by 92.5%. So 100% minus 7.5% gives you 92.5%. So 92.5% of 732, £399.60. And the VAT is 20%. There's the instructions. In the exam, VAT is 20% in here. Always read the instructions beforehand. So let's just sort of go through here. All businesses use a manual bookkeeping system. Okay, so we've got a manual bookkeeping going on in this one from AAT. Double entry takes place in the general ledgers, and we've got these for various ledgers here. And the cash book and the petty cash book as treated as part of the double entry system. So we've got them being basically as part of the ledgers in the general ledger in there. So there'll be cash books will have brought forward and carried forward balances in them. So 20% VAT is the VAT rate. So 20% of the net amount after the discount is the VAT, and there you go. There's the total figure there, and the total figure will drop into the total line here. The VAT is the VAT here, and the net figure is there. So a remittance advice question. This is a question from the AAT practice assessment. So you've received a cheque for 1,567 from Jack, whatever, See It Limited, which they incorrectly stated as in full settlement of the account. So when they present a cheque and they've said that it's in full settlement, and so they've done a remittance advice here, as they told you that's what the situation is. Here's the customer account from the sales ledger here. The remittance advice is saying that they've paid that. Now, they've not actually sort of said what they've paid. They're just saying it's in full settlement, really, here. Show which 3 transactions are outstanding by identifying the relevant transactions we've logged. So which one of these 3 are going to highlight? Which ones are going to highlight as being outstanding? Really in here, it's a 3-mark question. Now, the important thing on this question is to not get stuck in terms of time, really, and just sort of get on with it, because you could spend 15 minutes on this one, and that's why in let's say other tasks you're going to do them faster. But we've got 3-mark questions, so we'll go from now and then 3 minutes for this one. If you finish it early, skip towards 3 minutes. But at the 4-minute mark in this video, I'm going to give you the answer and how I went about it as well. And you should have come up to 2 minutes on this question, so you should have hopefully made a bit of progress into it now. Okay, so it's time now. Let's look at how I did the task here. So in terms of, let's break down this question here. We've got this amount here that we've got to get to. So in here there are some figures which will get to that amount there at least within here, and we've got to see what's left over. Now, the way to approach these questions is to always look down the right-hand side first. You know, the credit side in the sales ledger account. Really, let's just look at what sort of has gone on in terms of. So here you can see we've got a bank amount that's actually come in here, and that bank amount here I sort of deducted from the balance brought forward straight away. So I got that one from there, and that left me with £480 left over, which is that credit note there. So I could clear those three out immediately by looking at. So you always want to look down the right hand side. What have you got? You've got credit notes in your bank accounts, or payments really into the bank account. So it's gone debit bank, credit, trade receivables control account, and also then credit this customer's account in the sales ledger. So I've cleared those ones there by looking down the right hand side, finding a payment that I had in there and deducting it from the balance brought forward. That gave me a figure that was left over as a credit note. Those three cleared, definitely not those. Okay. Then I looked at the figures on the debit side of the sales of the customer's account really, and this is the amount that's been paid, 1567 here, and I had this invoice here which is way larger than that figure, so that couldn't be possibly part of it, so I cleared that one off really. And then I looked at, well, what could get me above the 1567 on this side, because I'm going to have to then deduct some form of credit note from it. I've got some credit notes here, it's going to deduct from this amount here. What would get me above it? Well, those two together wouldn't get me above it, so that's not going to work. But those two did get me above the figure, and that got me to 15999, and I could deduct off this one credit note from here. So that was those three there, was that there, and then that meant that these three ones were the leftover ones. Those three are left over, and that's how I went it. So you do need to have a bit of a strategy going into this one. If you're just sort of randomly putting, trying to add things together, you'll run out of time quite rapidly. If you find yourself getting a little bit stressed out and frothed out by it, hold this question until something like the last one there. Now, don't use up 15 or 20 minutes on this question because it's 3 marks. A lot of this one is about will you get hooked up on it. Now in this assessment, this was in task 1C, so this was like really right up in the first question really in there. A student could very easily blow 20 minutes on this task, have a complete breakdown really in terms of how it is, and then walk out the exam. So it's a test of mental toughness, this one. So why I said do this task, and all the questions which we do, so do them to time, because you'll get used to the idea of it, and we'll see what the breakdowns are. So this one here was very much about strategy, about how we're going to go about it. Look down the credit side first. You've got a payment here, right? Okay. The brought forward is very rarely going to be actually in the answer, to be carried forward there. So it's usually going to be part of this sort of calculation there. So that's how I did it, and then that's how I got to do this one in 3 minutes. But what I would say is it even took me 3 minutes to knock this one out, whereas in the normal ones I'm usually getting a mark every sort of 20 seconds or something, whereas if I'm using my full allotted time for this, that's quite a tough one. Hopefully that was useful. See you in the next one. Prompt payment question. This is from the AAT assessment. So 2 marks for this question, but really we need to clear it in a minute because we need the time for elsewhere. So back in 1 minute, let's get this question cleared. Okay, so in terms of this answer then, it's quotation to supply goods, so a quote being given for 3,550 plus VAT. So this is, because it's plus VAT, this must be the net then here. And we've got a prompt payment discount at 2%. And now what's the payment amounts that can be paid? So what they're actually going to pay. So net is 3,550. And the VAT is at 20%. So in terms of the instructions that were given in the assessment, VAT is at 20%. So that's £710 here, and the gross therefore will be 4,260. We multiply that by 98%, 0.98, in there to give the answer of £4,174.80. So that's the answer for this question. This is a purchase order to sales invoice question. So we've got a purchase order here, and we've got a sales invoice here that we receive. So sales invoice from the supplier, purchase invoice for the buyer, same document. And then we're going to highlight this discrepancy down here, 4 marks in here, but really we need to clear this in probably 2.5 minutes. So I'll be back in 2.5 minutes to get that question done. Okay, so I come up to time now. So here's the answer really. In terms of terms of payment here, the agreed terms were 3% discount for payment by the end of the month. So that's by the end of the month here. And the terms here are net monthly. Now net monthly is by the end of the following month. So if this was, when was it, 15th of April, so it would be 31st of May into that one. So that one's incorrectly shown in the invoice. The VAT rate is at 20%. It's not shown on the purchase order, doesn't have to be in there, and in this assessment VAT was at 20% in there, so it's correctly shown in the invoice. The trade discount here, so we've got a 5% trade discount in here. It's not shown, so it's not shown in the invoice. Really, a bit of a questionable on this one, whether it's incorrectly shown because we've agreed a trade discount in there, but when we might have been just trying it on. But anyway, it's not shown on the invoice within here. And sometimes this is one where you just have to move on, because you could have gone incorrectly shown in the invoice as well on that one. It would have been sort of equally sort of possible to have gone for that one really, but just, I think that's the one not shown on there. Simplest answer really, and so that would be the answer that you go for if you went for that one, but move on really, and make sure you get the answers, you're scoring marks. And then quantities, 400 was ordered and 450 was included on the invoice. So that's this reconciliation question. You see a lot of these reconciliations between various documents. If you watch chapter 13 to sort of see the flow, if you're struggling with those ones of who's the buyer and who's the seller and who's where they're going, that one really sort of puts them all in order. So in terms of this question, it's a daybook question. Choose a daybook and complete it. Now it says 5 marks for this question, but realistically you need to clear this in probably 2 to use this time for other ones. So I'll come back in 2 minutes on this one. Okay, so in terms of this, the answer to this question, again, just in terms of reading it, an invoice below has been received from Benton PLC. So an invoice in here from Benton. So Benton's the seller, so it's a sales invoice for them. Therefore, it's a purchase invoice for us. We bought those items, so this is a purchase invoice. So which is the correct daybook? Well, a purchase invoice is going to the purchase daybook. So purchase daybook, there is the answer to that one. And in the so we've gone into the purchase daybook in here. And in terms of our details, who was the seller? Well, the seller was Benton PLC, and the buyer was P Hill. So that's the answer for those ones. And then to complete the amounts there, though, this is the gross, so that's the total. There's the VAT, and there's the net there. Okay. Just in terms of just adding on to this one, so this is going to be credit the trade payables control account. 256.50 if we ever have to do that one. Debit the VAT account, £42.75, because we can reclaim this VAT from HM Revenue and Customs. So that's not going to be something that's going to reduce the money for our shareholders. We're going to get that back, and then we're going to go debit the expense, the purchase expense, £213.75, because that is going to be reduced from the amount that we have available for our shareholders. Shareholders are a money out item. It's a reduction in the money out item, so a minus times a minus, which is a positive, and positive money is a debit. So that actually on the end, just to pad this out. Right. Okay, so we've got a statement of account, a supplier statements of account question here. Policy across PLC to check statements of account when they can receive and to only include payments in the payment, those things that are in the supplier's account within the purchase ledger. So they've been quite kind here. They've given us they told us that this is the purchase ledger here, and this is the supplier statement of accounts. Could have actually just sort of taken out those names and then sort of had a little bit, think a little bit more. But then so we got this. We're going to go through then though and decide we're going to do a payment run, and then what in here on the supplier statement of account is in their account in the purchase ledger, and therefore what is not going to be included within this payment really in here. And then at the total, and at the end, then what is the total amount to be paid? Now it's a 3-mark question. I think you'll use the full 3 marks, so I'll come back in 3 minutes and give you the answer. Okay, so we're coming up to time. We've got a little bit more time to do it. I'm soon going to give you the answer. Okay, so come to time now, and let's see what's going on here. So what we're going to have then is got the supplier statement of account, from our supplier. Yeah, we've got their account then in the purchase ledger, in our purchase ledger. Okay, and whenever I do one of these reconciliations, if it's the purchase ledger, I like to look on the debit side and see what's being paid out, and if it's the if it's a sales ledger, look on the credit side and see what's been paid out as well. So we haven't looked through and seen the bank amount here. Now, the examiner's been very generous in this question here. And they sort of set the bank account figure as the brought forward figure here, so those are reconciled off, and so those are cleared. Could have decided to put an invoice amount on top in there, and so actually sort of added on, let's say, this invoice to the amount here, and then that would be already be sort of paid off. But they haven't done that here. That's very kind of them. But you always need to be mindful that's a potential in there. So we've blocked those two off there. Then we got this credit note here, and that one's there. These invoices here, 1, 2, 3, those invoices are all in there, and so these are the amounts that are not in, and so they won't be included. So they won't be included in the payment run. So we've got all of this stuff in here, and we've not got those ones in there. So the payment run is actually going to be minus 150. So that's the credit note. So they put a credit note in there, a goods return, to try and see whether you can get used to the idea that is money being taken off the payment. And we've got those 3 payments there. A little tip for Excel. You see as I highlight these here. And there's a little summation of what it actually is added up to is 11071. And that's the answer in there, but you'd add it up with the calculator. Hopefully that was helpful. So we've got a purchase ledger payment question here. You've got this account in the purchase ledger, and here you've got a credit note to put into the purchase ledger and then determine what the amount is to be paid. 1 mark, 1 minute. Okay, so let's do the answer for this one. So this is a purchase ledger in here. So we've got our credit side of the purchase ledger, the amount that we owe, and the trade payables control account. So this is the thing that relates to Stone PLC in the trade payables control account, held in the purchase ledger. And we've got the debit side where we're making payments and getting credit notes coming in. The examiner's been really generous here, actually, to be fair, because they've included a credit note within the amount in here. They shouldn't really have, because then because you can already know is now you can put credit notes on this side, really. So probably shouldn't have included that in there, but anyway, they have. So the credit note we're going to here, the 198 we're going to here. So this is the amounts before the credit notes on the debit and credit sides. And here the amount for the credit note goes into here, and so the amount that's going to be paid is going to be 2233. So that's the answer. 2233 is the answer for this one of what will be paid to clear this account. Prompt payment discount. So we've got 2 suppliers here, offering us terms, put in the date by which you're supposed to pay by, and the amount that you're going to pay if you take advantage of the prompt payment discount. So what will be the discount? What's the amount after the discount received? There's first 4 marks for this question, but realistically you should be knocking this out in sort of 2 minutes. So we'll do the answer in 2 minutes. So you should be coming up to try and get it finished. Right, and that's time. So in terms of our amounts here, a bit of an easy question really. They didn't really do anything sort of hard, just sort of within 10 days and within 14 days. So 10 days on the 5th of July, 15th of July, then 14 days on the 5th of July, 19th of July. Nothing difficult there. Nothing like net maybe net payment or something like that really. Still net payment would have been the end of the month after, so that would have been August. So 31st of August, and it would have been if we would have gone for something a bit tougher, or end of the month at least, something like that. But quite easy on that sort of side. And then in terms of the amounts that are payable afterwards, there's got a 2% discount here. So we pay the discount's always on the total amount. When we've got a prompt payment discount, because they're going to reclaim the VAT or not have to pay as much VAT in there, so it's not on the net. Bulk and trade discounts are on the net, prompt payments on the gross. So 1350 times by 98% and 3180 times by 97.5%. So those gives you those answers there. So this is a cash book question here. We've got some remittance advices to enter into the cash book, do some calculations and what have you. So complete the cash book in there. Then we've got some payments coming out as well on the credit side of the cash book, so complete it. It's a 15-mark question. Realistically, you should probably knock that out in about 6 marks. So if you've got, so it's about 6 minutes. So I'll come back in 6 minutes and do that one. But run this one to time. It's a really good test for timing of your things. And then what I'll do as well is I'll show you in the exam, in the question answer for this one of how to check your work, what it actually really means. It doesn't mean do the question twice. So let's do this one 6 minutes then. And we'll come back and do that at that point. That's our 6 minutes. That's the 6 minutes that we've been going through. So I'm now going to sort of take you through the answers. Really, if you haven't managed to complete it, then just pause it, because you still have got probably a good 10 minutes marks or 10 12 minutes to be able to do this question. So now I'm going to sort of take you through the answer. Really, so we've got two remittance advices here. So one is for a bank sale in here. So this Burgess resale. So that was the first bit there. Burgess retail coming in for that one. So it was there. Burgess retail was option 1. That was the first one in there. The first remittance advice. Could be the other way around though. It doesn't really make a difference. So I'll put that one in there though. It's a BACS payment. So a BACS payment goes to the bank. So it also says transferred to the bank anyway. You'll do BACS payments though in the Principles of Bookkeeping Controls unit. So that goes into that. Now it was in full settlement of our June account. So that one was a trade receivables payment in here. So the sale had already been made by our sales invoice going through the sales ledger into the trade receivables control account. And also the account within the sales ledger, and then this one here is just being paid now into the bank, so going debit bank, credit trade receivables. There's a second one here from Alba in here, so that was the option there for Alba, right? It's a bit weird, really. They pay for £1,000 of the cheque, so that's going to go into the bank, so £1,000 into the bank, and 326 in cash, or 326 in cash there, and it was for goods supplied today. So it wasn't already been sort of gone through the sales ledger, and through the trade receivables control account. And it includes VAT. So in terms of including VAT, then you've got to get back to the net. So to get back to the net, the 1326 divided by 1.2, giving us £1,105 as the net in here. So the net cash sale would go into there. Of that 1326, 221 of it, 20% of the net, is going to go to the HMRC, so the tax lot. That's going to be paid out in tax. So that's not going to be going to our shareholders. That's going to be going to the government in tax in here. So that goes into the VAT figure in here, and then those two numbers go into there. And then in terms of checking of your thing, see how I've done the calculations here independently. So I've divided that by 1.2 to get to the 1105. I've times that by 20% to get to 221. I can then add those back together and see whether they equal those ones there, and that's checking your work. So that's the first checking your work check that you can have in here. We then total down each of the columns. Total down each of the columns in here. This is the debit side of the cash book. In there. There'll be a credit side over here in real life. Credit side will be over here in real life. So the debit side. So there we go. Sort of putting all those figures in there. Now this is a cash book where it is both the book of prime entry, but also as well the ledger account as well. And so this was in the exam statement. It sort of says that it uses that as a part of the double entry system as well. So you go through totally amounts up. Now personally as well, I would also, if I was in my workings, be sort of just checking them anyway and see if I add those together to those to equal those as well as a check. So that'd be another check in my work really. That's how I'd be going. So that's the first bit, and then the second bit in here. Now we've got the credit side of the cash book shows cash payments in here. So and this one here now, we weren't short, no shortage of time, so there's no point in just sort of doing silly, just additions like this. We'll put a T account in there. So this is the cash T account in here, starting with the total of the debit side. So I pulled the whole of the total debit side in there. I could have brought forward and put the cash figure in there, but I shortcutted it because it would need to do that. If it would, there may have been an opportunity or a reason where sometimes I would have put the brought forward and the amount in there. But anyway, I started with this figure 509. I then put in the expenditure there, and I put the carry down in there, and then I retotaled. So this again was checking the work. I put the carry down in there, and then I retotaled to just make sure that 167 was 167, not under pressure. I put in 157 whatever in there, and then I'm just being neat in terms of the brought down figure. But that's the 167. But that was do your T account in there, work out the carried down, then retotal to see whether the totals equal the same, and then you're right. Again, a check in the work option. And then here we got the cash side, the credit side, the cash for the bank. So bank payments 1743. put that in there again on the credit side in there. Then I carried it down, retotaled it again to just make sure that it checked, and the brought forward is 2951. So that's the end of this cash book question. This is a petty cash book question. 7 marks in total for this bit really here. You've got a petty cash book here. In there, what's the amount to restore the in-press balance? In there, what's the amount to record the closing balance? And then what's the VAT column in the cash book? It is 7 marks, but probably about 5 minutes. We'll come back in 5 minutes and give you the answer. You've used up 3 minutes so far. So you should really be clearing this on off and have a minute to go. Okay, so that's time. If you haven't finished it, I mean, you've got 7 marks for this question, so you can sort of pause it and complete it. But I'll go through the answer now. So on this one here, so in terms of a petty cash thing, this is an impress system. So it says it's on the impress level of £175. So we're going to always get back to that at the end of each month. It's quite sort of generous in this question because it didn't really sort of give any sort of any little bits of sales or something like that in there. I would have put a little bit of postage or something from the front desk in there. So what you do is you just create the T account. Always revert to a T account in these things here. So here's our brought forward amounts for the T account in here. There's our expenditure. So all of these amounts here, all added up to this amount here. We've got to get back to £175. How do we do that? Well, we get £130.28 from the bank. So that'll be there. And because we've done our T account, we can see that it's on the debit side in here. So that was the answer to A. Then in terms of B, what will be the entry in the petty cash book to record the closing balance? So it's the closing balance on the 31st of August. So this carried down is the closing balance on the 31st of August, the carrying down of it here. So it would be balance carried down, £175 in credit here. So that's where preparing the T account in here was the most important thing, and it's always important for students, and actually in professional life as well. Really, you must always revert to T accounts in there. So that's the sort of tip. Never sort of do away with T accounts. Always have them there in your notes, what have you. So there's a T account here. I carried down figure of it, and that's it. And that really sort of straightened up all the timings, because you could get a little bit caught up between the brought down figure, which would actually be the 1st of September. Yeah, so first, if we were putting dates in here, it'd be 1st of September here and 31st of August here, and so that's how that would work. What was the total of the VAT column in the petty cash book? Well, you just added the VAT column. It was £19.06. So that's this petty cash question. So petty cash question. So this is a petty cash question here, and we've got 2 petty cash vouchers in here, and the question wants to know what the total VAT and net amounts to be entered into the cash book. So the total VAT and net amounts into the cash book here, and then also put in the analysis of what it would be in here. Now it's 8 marks for this question, so it's quite a lot of time. Realistically, you would knock this out more in like a sort of 3 minutes really in here. So if we go for 3 minutes, but really it's very important on this one, because there is such a high mark, 6 marks for this question in here, to make sure that you set it out in a way that's going to check your work. So we'll come back here and we'll do this in 3 minutes time. Okay, you should be coming up to time now. Just a few more seconds and we'll go through the answer. Okay, that's time on this question here. Now you did have a lot more time available to you because this is 8 marks here. So if you haven't finished off the answer, then pause it at this point and finish off your answer. Really, you've got a good 6 minutes to get this one right. So we'll go through the answer now. So this was an important one here because you've got a lot of marks here for this VAT calculation here. Basically, this question is more of a test of VAT than anything else really, and it's important to hoover up all of those marks and get it right. So what you do is you create a little table with the gross, the net, and the VAT, and you calculate them independently of one another. So here in this first one here, you've got £41 and 55 pence. So that's the net. So that's the net figure that we're starting off here. And in the instructions, we've got VAT at 20%. So what we're going to do is we're going to calculate the gross and the VAT independently of each other. And then we're going to add them together to see if they add together. So this VAT is going to be 20% of the net. So that was 20% of the net there. And then the gross is the net times by 1.2 here. Then you add those two together and see if it's the same figure. And that means that if you did make a mistake in your calculation or whatever for one of them, it's not going to bring down the whole question. And so that's how you do it. And this is what's just checking your work really, because you can just do the question twice, and that means that you got 2 different answers, and then you have to do the question 3 times. So here we've got the net in here. This is the one that we start with, and then we're going to calculate the VAT, 20% of the net, and we're going to calculate the gross, 1.2 times the net. Here, then we're going to add the net and VAT together, see if it equals the gross, and we're sorted. Here we've got £35 and 28 pence, including VAT. So this is the gross. We start with the gross here. So divide by 1.2 to get the net, times the net by 20% to get the VAT, and then add them together to see if they equal that there. So if this was wrong in here, and then you multiply it, so you got that one wrong, and then you multiply it by 20%, and then you'd know that you weren't right in the answer because it then wouldn't equal back to the gross. So that was the answer, and that's the approach to going through this question really. Put whatever one you've got, the gross and the net or the VAT in your little box, then calculate them independently of each other. So the net would be if we started with the VAT and they give us £8.31 of VAT, then we divide that by 20% to get the net there. And so you just do it like that, trying to work out your various different methods. Now we've got some analysis in here. We're looking at the thing. So this is a parcel delivered by a customer to the courier, so postage and carriage, parcel postage in here. And then this one here, it's a little bit nasty really. Keys for car park gate in here. Nothing, it's not really on here, is it? So we're going to go for miscellaneous expenses in here for this one in there. It's an interesting one, really, isn't it? Car park gate, is that the office car park gate and whatever there? So I don't know, you're going to go for miscellaneous expenses on that one, unless they're very, very specific. It's miscellaneous expenses, really. And that's the answer to this petty cash voucher question. Discount allowed daybooks question. So 9 marks for this question here, which isn't, it wouldn't take you 9 marks anyway. Oh, 9 minutes anyway. So we've got this is an output in the discount allowed daybook. So we've got, these are the totals there though. What we're going to put in the general ledger. You've got some options over here, and you've got to decide the amounts and the debits and the credits in there. So although it's 9 marks for this question, that's because of content rather than because of time it should take. This should really only take you about 3 minutes. Come back in 3 minutes and do the answer. Right, so that's time. That's time in here. So this was almost 9 marks in here. That's more because of content rather than because of time it should take on this question. So here's the answer to the question. So we've got the amounts dropped in here, which we drop in from here, the gross, the VAT and the net, which is going into there. Doesn't matter which order that they go into. And then in terms of this is a discount allowed daybook. So here we've got, we're going to be allowing, so discounts allowed to our customer. Our customer is going to pay £510 less than they always. So they're going to pay us in the sales ledger control account £510 less than they have. So credit the sales ledger control account, a reduction in a money in item, reduction in asset is a credit. Negative money. So credit the sales ledger control account £510. Now we're not going to have to pay the amount of VAT on that anymore, so that's a reduction in the money out item in there. So that's a minus times a minus, so a reduction in the money out item. So that's a debit, positive money for us. And then in terms of the discounts allowed, the net is the discounts allowed amount here, and that's a lower amount that we're going to have to pay over to shareholders in the future. So a reduction in a money out item to shareholders in the future. Minus times minus is a debit as well. So that is the answer. That one. So discounts allowed 425 debit, VAT debit 85. I'm not having to pay that to the HMRC anymore. And then credit the sales ledger control account because it's a reduction in the money in item in here. Credit the £510. So a very quick question really for 9 marks. You just got out, but there's a lot sort of being done there. But that's the way to answer that one. It's a double entry bookkeeping question really. This one. So this is a discounts allowed daybook question for a credit note sent to Jackson Jones, the customer. Now, in terms of the situation here, if the sales invoice had to put that VAT is on all payments made, then we wouldn't be making a credit note because we wouldn't have needed one. But in this instance, the invoice hasn't got that on it and mustn't have it in there, and so we're having to send a credit note for the provision of a discount allowed. So 3 marks for this question in there. Read the question carefully. A little bit of a trick in this question in there. Come back and we'll do it in 2 minutes. Okay, so in terms of the answer, this is a discounts allowed debit question for a credit note sent. So Jackson Jones has taken advantage of a prompt payment discount. We've allowed them a discount therefore, and we haven't put on the invoice that payments are subject to VAT, and therefore avoided the credit note. We're going to have to provide them a credit note, and this is the answer here. So it's plus VAT. So first of all, we set ourselves up a little table, don't we, with that. And this one here is because it's got plus VAT, it's the net. It was including the VAT, it was the gross. The VAT is going to be 20% of the net, so notify that, and the gross is going to be 1.2 times the net. Calculate those independently, and then add together the net and the VAT and see if it's the same as the gross. That's checking your work, making sure that you don't get anything and you'll miss out those questions first of all. So 84 is the answer. Now this is where it's really tricky and you have to almost read the question going through. What will be the entry in the sales ledger? I don't think that's a fair question, to be fair, because the entry in the sales ledger would be discounts allowed. It will be into the account of Jackson Jones. So you have to sort of look through and sort of see what actually it's sort of saying in the titles here. because it would be Jackson Jones. The entry in the Jackson Jones ledger would actually be discounts allowed next to it. So if we had a T account in the sales ledger for Jackson Jones, and we pulled it up, it would be Jackson Jones as the T account name, and the account name in there. The entry would be actually discounts allowed. So read the question there. Read the titles about what you've actually been asked here. Good tip for that one there, because the account's name was there, even though the question was actually discounts allowed. So the answer is Jackson Jones because it's going for the account's name, even though the question is technically a little bit wrong. The amounts can be the gross amount. So Jackson Jones is not going to pay £84 now. They don't really care about whether it's the VAT or the net or whatever. That's nothing to do with the amount that's going to be paid in total. So the amount's £84 in there, and it's credit. This is a trade receivables amount, so it's a money in item, it's an asset, it's a reduction in a money in item, so it's a plus times by a minus, so that's a minus, and a minus money is credit. So a reduction in the money in item is a credit, so it will be credit, and that's the answer to this question. Cash book exercise. So in this question, 12 marks. You've got the totals of the cash book here, and you're going to enter them into the general ledger. Here's your options here of what you can choose in terms of those options 1, 2, 3, and 4. And there, put the amounts in, decide whether it's a debit and credit, and here there's the exam instructions. Now it is a 12-mark question, but realistically you're going to sort of clear that in about 4 minutes. So I'll come back in 4 minutes and do the answer. Okay, so you've got about a minute and a half left. So that's time. Let's look at the question and answer here then. And so the first thing is in the instructions. Let's sort of see what's been said in the instructions. And here the cash book and the petty cash book have been treated as part of the double entry system, unless the task says otherwise. So they're part of the double entry booking system here. So these cash book and the petty cash book are the ledgers in the general ledger account. So these columns here and here would have a brought forward and a carried down sitting around somewhere around here as well, and they are the ledger accounts. So they are the ledger accounts here, so they wouldn't be being posted to the general ledger because they've already been posted. By definition, they're in the general ledger already because they're in the cash book. Okay, so those ones wouldn't be there. These here are the analysis columns. Sorry, that here. So those 5 are the analysis columns then. And these are the ones that will be getting posted to the general ledger. So these VAT, trade payables, cash purchases, VAT, trade receivables. Those ones are the ones that are going to get posted to the general ledger. So that's what this this question meant. What was the entries in the general ledger? In case you're thinking, well, of course, the cash and bank is going to be in the general ledger as well. Well, here the instructions are saying no, they're already in the general ledger because the cash book and the petty cash book are treated as part of the double entry and trade bookkeeping system. So we've now got our analysis columns to post here. And if I did a line down here, so the line, let me just insert a shape or something here. Let's just put a line down here. There. So this side here, the debit side of the cash book. This side here, the credit side of the cash book. So we're going to go debit, cash or bank, whatever it was, and then they'll credit the sales ledger control account. Yeah, so credit the sales ledger control account. We've received this money in from our debtors, so it's a reduction in the money in item, and a reduction in the money in item is a credit. So credit the sales ledger control account, and the amount was 16,370. And then we've got these cash purchases. So cash purchases over here. This is on the credit side. So credit the bank, debit cash purchases, and credit the bank, and so debit the purchase ledger control account here, and debit the bank, so credit the bank and debit the VAT account here. So those were the options. There's our options in terms of how they go in there. And that's the answer to this question. So this is a T account question here. So it's 4 marks. Actually, you're going to do, when I sort of lay out the answer, you'll see that it's a little bit longer than normally. Normally you look to sort of knock out that in about 2 minutes, but actually it's going to be like 3 minutes to make sure we get this perfectly right, really, and avoid any kind of errors. So 3 minutes to get through this one, and I'll come back to you at that point. So there's a minute left now, just to But the key point in this one is are you going to get the actual answer exactly how I do it in terms of the neatness? Okay, so this is time. Let's go through the answer now. If you haven't done it off, you can pause it because this is a 4-mark question, but let's go through it now. Okay, so we've got a loan account here, and so what you do is you put it into a T account straight away. So we've got the 1,270 there, and then this is about the dates really here. So this question is a lot about the dates. So you see what the balance brought down is at the 1st of November. So it's giving the date here 1st of November and the balance brought down. It's not giving the balance carried forward. Sometimes it will be what's the balance carried forward at the 31st of October. Actually, that's sort of very much manual sort of bookkeeping really. Don't really have it in the digital system. It's just the balance. Here we have the brought forward figure here on the 1st of October. Bank figure coming in at 1,270 that we've sort of paid off. So we've gone debit bank or credit bank debit loan here probably. We have, yes. Then we've taken out another loan. Here, debit bank credit loan in there. So these are figures. Now what I've done here is I've done how I would actually do this in the exam. Really, and also as well actually how I used to do this in real life, and adjusted it in real life. I would actually total the columns first, then do the difference column here, the carry forward, and then I would retotal them here, and then check if they're balanced together. And that means that you absolutely won't make a mistake in there because you've had 2 goes at calculating it. Two sets of calculations down here, then you're sort of adding it up or working out what the difference is between the 2 of them, and then retotaling it in here. It's a little bit faster. And a little touch sort of neater almost really. You can avoid any errors like that one. Now that carried forward is at the 31st of October in here. That's the carry forward in there, and then it's brought down into the 1st of November brought forward. Now notice brought forward, carried forward. Here we've got BF here. Sometimes you have BFWD. Sometimes you have brought down. So it's not really, it's all exactly the same thing really, just in terms of particular style of the particular accountant. And I will switch backwards and forwards between brought forward and brought down. And then the office equipment one, again, brought forward figure coming in our office equipment in there. We've got a journal in here. Now what that actually is a, well, we're going, sort of prepayment, isn't it really? And so you do that level 3 where it's a prepayment that's been put in there. Don't worry about what the heck is that journal there. Then we've got a credit bank debit our office equipment. Now what I've done again is I've totaled the 2 columns and then deducted that one from that one, put it into there as the carry forward, then retotaled it in there though to just check that my quarter carry forward is correct, and then that is the brought forward on the 1st of the following month. So that's, now the key point I was saying here is that you can get this right, and you probably got you will have got the right answer in there. The reason why I'm saying and labouring the point in terms of exactly how I lay it out is because I can never get it wrong with this approach really. Always going to be, we can never actually get this question wrong because I've had 2 goes at adding this thing in there, and provided those two additions are equal to one another, and come up with the same answer, then I'm always right. Yeah. And then just in terms of the question really, you have to look at the dates in the answer. Is it carry forward on the 31st of October in this case, or brought forward on the 1st of November? So here, brought forward credit there. So 35455 credit, and then 14589 debit. So that's the answer for that one there. So this is a sales ledger question here. You've got a sales ledger account for Zara Z, you're going to complete it by inserting the balance carried down together with the date and details, insert the totals, insert the balance brought down together with the date and details. It's an 8-mark question, but realistically you should be knocking this out probably in 3. I'm going to come back in 3 minutes, but also as well, the important thing on this one is to, we'll go through the question or the answer really, but exactly how to be very neat and make sure that you get this right every time, not just getting it right in this question, but getting it right every time. So I'll take you through the example of exactly how to get it correct, right? But 3 minutes, come back and then good luck. Okay, so that's time. Now gone through, and let's go through the answer here. So basically, this is a T account here. So we've got our T account here, And what I do is I always I total my columns up first before I put the carry down figure in there. A little bit to just notice here as well. The examiner's made a bit of a mistake. This is an AAT exam. Really. So here we see the inconsistency between the brought forward and this brought down. It's a little bit inconsistent, really, from the examiner's point of view. Just point that out. So here we have our totals here, and then we're gonna. I always like to total them up first, then I deduct from one from the other to come up with whatever the thing is to get the two sides to equal each other, and then I retotal them. So in terms of checking your work, this way you just total the two columns up first, see whichever one's the smallest one, deduct that from the other one, put the figure in that side to make sure that it balances, retotal it, and that makes sure that this carried down figure is always going to be in the right place and always going to be total the correct thing. Because if this doesn't then rebalance when you retotal it, you know that you just made a bit of a mistake within your calculator in the exam. So that's what checking your work is about, really, trying to find little techniques throughout the exam that means that you actually know that you're coming out with it, and that's 100% right. If you come through, you've done it once, it's in the total, you've done it again, right, it's exactly the same, that cannot be wrong then at that point in here. In terms of the dates, so we start off here with the 1st of October as the brought forward figure, even though it should be the brought down figure if we're going for these options in here. And so that's the 1st of October. So the end of the month is going to be the, because what it says is the close of the day, so this is the close of the period here is the end of it. Now it could be a question that it won't ever do this, but you could theoretically have different periods to that to the end of the month, but it's always going to stick to the end of the month. So that was the end of the month here, and that's the carried down figure here, and then that comes across then to being the brought down. So if it was asking, so there we go, we've got one which is the carried down figure which comes into here. These would have nothing in there. There's nothing to go into those ones there because this is the carried down side here. Yeah, we put that nothing. So we've got 31st October into there, carried down into here, and then the balance of £10,002, totaling it up 15,241 on either side, in those two. And then the brought down figures on the 1st of the following month, so 1st of November, brought down 10,002. But by producing this T account here and doing that little method where you're totaling up first, deducting the smaller from the larger figure, then retotaling it, always means that you'll be right on this question. That's the important little trick really there. And in terms of the dates, then just in terms of sort of noting when the period ends and starts. Really. So this is task 9A. Now task 9A is just simply an add up of the debits and credits in the column. So insert the total debits and credit columns in a partially prepared balance. It's 2 marks, and it's 2 marks being given for free. There's nothing to be learned here except just how to use your calculator. So we're going to skip past that and move on to the next question. The trial balance question. So we've got some ledger accounts here. We've got some cash book balances here and petty cash book balances. The instructions for the exam here. Complete and create the trial balance. Although this is a 10-mark question, really, it should really be knocked out in about 4 minutes probably, and maybe we'll give you five in there. Make sure that you do check your work within those 5 minutes, and good luck. So you should hopefully be coming up to the answer now. Okay, so I'm going to take you through the answer. Here's the answer here. So let's go through here. Now, what would have been a good test actually is if we wouldn't have had these sales ledger controls and purchase ledger controls figures in here, and they just give us the sales ledgers, because that would have been quite useful, because you can see that the sales ledger equals the sales ledger control account and the purchase ledger equals the purchase ledger control account. So they're here. Whether they're necessarily needed or not within this question is not a bit pointless really, but it would have been quite cool actually if they would have missed out these figures here and had you drop them over here. So that would have been quite useful, but as it was a bit, it wasn't included. So let's just go through the items and why they are. So equipment hire is an expense, so it's money that's not available for the shareholders to have in the future. So it's a reduction in a money out item, and therefore it is a debit. So there's the equipment hire as debit. The sales ledger control account is a money in item. We're going to receive this money in future from customers, and so a money in item now is debit. Now the examiner's been very generous here by leaving capital at and actually showing it at 9816 really. Realistically, they could have left the capital out and just not had it in the actual question really here. And if they didn't include the capital figure, when the capital figures and the capital figure will be in the trial balance there, what you have to do is you have to total up the whole of the debits, total up all of the credits, and the capital figure will be the difference. As it was here, they left the capital figure in and provided for you. Now that's money that's going to go out to shareholders in the future in here, and so it's 9816. Now if it would have had say capital and then after it losses, then it would have been money that the shareholders owe, so it would have been a debit. But as it was, I don't think I've ever seen an example where it's been capital losses. So that's the credit, because it's money going out to the shareholders in future. Purchase ledger control account for 14588, money going out to the creditors or to the suppliers in future, so that's a credit. Legal fees, reduction in, it's an expense, reduction in the amount that's going out to the shareholders in future, so legal fees 781, debit. Discounts received, that's money that's available to go to the shareholders in future, so an increase in the money going to shareholders in the future, so that's a credit, 73. Drawings, amounts that we paid to the shareholders, so they can't have that in future, so a reduction in the amount that they're going to have in future. So that would be a debit. The drawings is debit because there's a reduction in the amount that the shareholders will have in the future. Reduction in a money out item is debit. Purchases. It's an expense. It's a reduction in the amount that the shareholders can have in the future. So a reduction in the shareholders have in the future. Reduction in the money out item. That's a debit. So 16,492 in our purchases. In terms of our other balances here, now this is in terms of the exam instructions, the cash book and the petty cash book should be treated as a part of the double entry system here, unless task instructions say otherwise. So these are the ledger accounts in here, and I quite like this one here because it's saying cash book overdraft here, and this sort of is to stops people who use dead click really, because people who use dead click go, oh right, it's a bank, it's an asset, therefore it's a debit. Well, actually it's not. It's money going out to the bank in future. It's an overdraft. In there, so it's a credit. So it's money out item. So a money out item is a credit, 3126. So that one is a 3126 on this side here. And the petty cash book is is an asset. It's cash held now, so it's a money in item, 175 debit. You add all of those up, and you'll get a total of 65,487. And that's the same on both sides there. So we know that our answer is definitely right. So that's how we check our work here. We add up our debits and we add up our credits, and realistically, it would be quite nice if they would have left the capital figure as being nil, a blank there, and then we could have had to work that out ourselves, which I think would have made this more worth the 10 marks. But that's the answer to this question. This is a coding question here. You've got two new customer account codes here, and this is the question. Come up with the code that's going to be put in here and in here. It's a 2-mark question. It does need a bit of thinking around this one, so 2 minutes for this one. Okay, so that's our 2 minutes. So we've got a new business here, and it's customer account codes for each customer in the sales ledger shown below. So the customer code's made up of the first 4 letters of the customer's name. So we know that it's going to be the first 4 letters. So we've got heart here, heart on the one hand, and we got heart on the first. So that's the alphabet of the alphanumeric code. The code is followed by the number of the ledger page allocated to each customer in that alphabetical group. So I think the examiner knows what actually is going through their head, but perhaps it's very badly worded, really. So let's go through and try and work out what it actually sort of says. So alphabetical group, so is the A's here, and then there's ledger page 1 for the first one, ledger page 2 for the second one. So if there was another, sort of A, it would be number 3 there. Okay, so we've got a heart here, so we've got H. So there's no H's, so that would be, and how many letters is it? 0, 1. So it's just a heart 0, 1. So that's the first one. All right, so let's make sure that we keep perfectly with how they do it. It'll be H-A-R-T, capital case. And then the next one, parks, we got 1, 2, so this will be the third one. So it'll be park 0, 3. So that's that one. A little bit sort of interesting, that I think, really, in terms of I don't think that final last bit is very well described, really, to be honest with you. So, and this a little bit into why you practice questions, just to be able to just roll with it. If you didn't get that, if you missed off that one, so what? Really, it's 1 mark at the end of the day. Prompt payment discount question. So customer's been offered a prompt payment discount within 10 days. Show the 2 actions that should be taken if the customer takes the discount and pays within 10 days. So just knock this one out. Say a minute for this one. Okay, so let's go through. So what 2 actions should be taken if the customer takes the discount and pays within 10 days? So record the amount received in the cash book and ledger. So they paid. So we are going to have to record the amount received in the cash book and ledgers. So it is answer A. So that's the first one. So it's this one here. That one's right. Change the amount to the original invoice? No, you wouldn't. Prompt payment discount? You don't adjust the original invoice. So no to this one. No. Issue a new invoice for the amount paid? No, you wouldn't issue a new invoice for the amount paid either. So you wouldn't do that one either. And this one here, issue a credit note, is a credit note for the discount taken plus VAT. Okay, so this question is not technically correct. That could be an action because it should be taken. I suppose it should. It's really more could be taken, really, because actually the initial invoice could have VAT is only payable on amounts paid on the invoice, in which case at that point, when we allow a discount, we don't actually have to issue a credit note because that's already taken into account in the initial sort of sales invoice. So it is D because you have to roll with it and find what the second answer is. It's not technically D, really, in that it would more could than should if the initial invoice didn't have that on. So you have to be mindful that if there was a question that had like an invoice and they provided a sales invoice and it had the wording at the bottom, the correct wording, which has said that VAT is only payable on the amounts paid, then this wouldn't be the answer. But because it's not given that invoice and because it's the only answer that could actually make sense here in there, it is the answer, but by default rather than because it's definitely the right answer. So the answer is A and D in there, but actually it's not a great question, this one really. I would say though, AAT continually make this position within their questions. So you have to sort of roll with it and sort of accept it there though. But just be mindful that one day the examiner might wake up and put a sales invoice in there which has the wording on it, in which case it wouldn't be. That's D, and I don't know, but I don't know whether that might be just too harsh and too hard a question really. So that's the answer. La 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 la. So this is an accounting equation question here. So you got a list of assets and liabilities. Produce the assets, liabilities, and capital. It's 3 marks and 2 minutes for this one. Let's get it going. Okay, so let's have a look at the answer. And what I'm going to do is I'm going to go through it a bit more detail as well in terms of how it should look in terms of the answer. So let's here we've got the assets equals liabilities plus capital. So that's the accounting equation there. And if you see the Osborne, if you've been taught in the Osborne book here, you'll see assets minus liabilities equal to capital. Well, that's the statement of financial position really of what the shareholder's position is. And so I can see why that's been taught. It's sort of the balance method of whatever's left over for shareholders after assets minus liabilities. However, really it should be set out as in assets equals liabilities plus capital. And the reason why is that's money in, all the money in is equal to all the money out. There, and it sets up the T account position with debits equals credits really. So if you've been taught with assets minus liabilities equals capital, just try and tweak it around to work the other traditional method really of the accounting equation. It straightens up all of the debits and credits, makes your journals a lot easier to produce, and suddenly it makes a lot more sense in terms of capital actually being a credit because it's a money going out of the system. If you're struggling with your debits and credits, do the paper and cups thing. It's 40 minutes and you'll have it all sorted out by the end of it. So on this, the point of this question really is to try and sort of finish off dead clickers as well, because dead clickers will be going through and going, right, okay, that's an asset, that's a liability, no one put capital in there because it's not appearing in there. So that's the other part of this question as well really. If you're being taught with dead click, which is the last sort of way you should be taught really, it's a bit of desperation if you're just not getting anything, then this is a bit of a problem for you, this question. So we've got all of our assets here, and we've gone through here. So premises, that's a money in item. Anything that you can sort of sell for £1 or more, that'll be an asset. So you can sell this building. You've got this cash, which is cash in the bank in here. You've got this furniture, you could sell that as well. Amounts owing to, and we'll look at the time here, that's owing to, so that's a liability. Amounts owing from, that's an asset. Money's going to come in. So there's our assets. Here's our liabilities. There's money going out in here, so we've got that figure there. Now, assets, it has to be equal to liabilities plus capital. So capital, to make this balance, has to be 85,653. Then what you do is re-add it together again, add liabilities and capital together. So we've done this calculation once. Then we add it back together and we make sure that they equal the same. And so this is checking your work. Checking your work is not doing the question twice, because you could just end up with two different answers, and you think, well, which one do I go for in terms of 50-50, or you just get very upset. Now you add the thing back together and just check that it's the same thing. If it is the same thing, you know you've done all your calculations correctly. If it's not, do it again. And so that is the answer to this question. This is an awareness of financial statements question. This is the way that AAT tests awareness of financial statements. And so we've got some transactions here, and you're going to decide whether they're capital expenditure, capital income, revenue expenditure, or revenue income. It's a 5-mark question, but really you're going to clear that out in 2 minutes at the very most. So we'll finish it off in 2 minutes. Okay, so let's look at the answer. Now, revenue expenditure and revenue income are about the financial performance of the business. So between point A and point B, so if we have a time point A and we have time point B, how is it done in terms of this, the sales that it's made, and the income expenditure that's incurred between time point A about the financial performance of the business. So that will be your sales and expenses, that kind of thing really, that's going to be in here. Capital expenditure is about assets and capital really, assets, capital, and liabilities in terms of how they've moved, but in terms of things that aren't part of the financial performance, so things that aren't sales or revenue. So things like the purchase or sale of assets, the incurring or clearing of liabilities, and any money that the shareholders may have put in or taken out. So that's what we're going to see between those things. So purchase of a motor van, so this is an asset here for the delivery of goods. So that's capital expenditure because it's an asset and it's an expenditure. It's payment out. We've expended this one here. Purchase of stationery for the use in the office, though. This is about financial performance between the points A, how the business is done between points A and point B. So that's going to be revenue, and it's a purchase expense, so it's an expenditure. Purchase train tickets for business travel. Again, this is how the business has performed between the 2 points here. The sort of the profit and loss account of the organisation, really. So we've got revenue, and it's a purchase again, so it's expenditure. Now, receive cash for the sale of goods in here is going to be revenue income because it's about the sale of goods. This one here. If it was received cash to clearing of debts, then it would be more about a capital income. But actually, this is for the sale of goods in here. We've received the cash for it, so that's going to be the revenue income side here. So it's a revenue side because it's about the sale of goods here, and it's received cash, so it's income. Received a check from the owner. So the owners, as in, that's not part of the financial performance. This is about the capital movement, not because of financial performance, but because of the shareholders themselves. So the owners, so that's in the capital line, and it's received a check, so we got some money in, so it's income. So that's that question. And that's how AAT tests the awareness of financial statements at level 2. At level 3, then you're going to do in advanced bookkeeping this in much more detail.